you're a public company, you're raising money every single day in the market, and those shareholders, right, don't necessarily have any say. You have a board of directors that is elected by all of your shareholders, but there is not a significant amount of say from any one investor.
So Matt, if I were to come to you and I was me, a small indie label, but with a catalog of 6,000 titles that have been around for 26 years, and some of them sell pretty well, what would your advice be in terms of looking for financing?
I think before you were looking for, so from a debt perspective, from an equity perspective, I would say, if you're looking for equity financing what I would say is the most important thing is to show sponsorship, show leadership, and a well-defined business plan of how you're going to grow from an equity perspective. On the debt side, my biggest attribute that our team really looks for is, how is the management team organized? One, do you have access to capital? We try not to, I wouldn't say we try not to lose money, because I think that's everybody, but we are the least risky part of the capital structure. So if there's ever something that goes wrong in the business, we like to know that you have access to additional capital. So if something happens, right, when you go through one of your loan to value increases, or one of your covenants is breached, we want to know that you have that ability to go out to another party and say, we need to go ahead and pay down some of this debt. So access to capital, management team, and then the other thing really is just diversification of the catalog. We don't want to see any one artist or any one song really make up too much value, because then that's just too much volatility.
Well, and you might ask Massarsky to do an appraisal of her catalog, right, if you were exploring a
I would say 100% of the time we will ask a valuation consultant to do it.
That might be the first step.
That might be the first step. I'm just wondering if indie labels, the vast majority of indie labels are not publicly held. They're usually sole proprietorships, or corporations with a board of 1 or 2 people. So it's kind of you guys are getting into this market because you're coming into the master copyright market, but it's like the vast majority of us don't seem to be structured the way banks normally would like to see a company be structured. So what's the workaround for that?
I think the workaround, I don't know what the workaround is.
I think what you're getting at is the governance is key, right? They're investing ultimately in the people, and they're expecting them to execute. So you want to look normal. You want to look the way they expect you to look. And once you figure that out, executing and promulgating good governance really is key to getting any financial partner involved.
I think also if you're a smaller independent label, just getting clean financials, clean set of income statements that just look, easy to disseminate, easy to follow, because a lot of times, well, I don't want to make a generalization, but sometimes the smaller owners have, their papers are a lot less in order.
Oh, wait, you mean all the receipts are in a box? Yeah. Been there.
So it actually...
get a better valuation if you're organized when you go to her.
Well, I always say that our valuations are as good as the data that we receive. Yeah. So the cleaner it is, the better it's going to be for everyone.
Right. I just think it's a really interesting proposition. I mean, when I got a call from an investment company, it's being like, we're interested in your catalog, we're interested in possibly investing in your company. And I was like, what is that? I've never been to business school. I don't know anything about this. And I'm like, I think I run a pretty tight ship, but I think you guys will really not think so, So it's just an interesting marriage of these two worlds because I think the way I run an indie label is probably pretty normal, pretty straightforward for what people do. And then for what you guys do, you do it well. But like, how can we
Well,
get together and make this work
I
for
have
everybody?
a concrete suggestion. You do what you do well, right? Which is curate music, bring it to the market. Find advisors
Yeah.
That's good
who
advice.
provide the missing links for you. Your credibility also is directly tied to the credibility of your advisors. So bring in a great lawyer who has great relationships. Bring in a great accounting firm who knows everything about how your financials are supposed to be constructed so that when Matt looks at it, it looks exactly like what he's expecting to see. They know exactly what your database should look like for all your income so that when Nari looks at it, it looks exactly like what she's expecting to see. Get great advisors. They're worth every penny.
That's really good advice.
Also, I think indie labels, they have different other options. Well, depending on what your own goals are, whether you want to expand or sell or acquire, or just raise some debt. There are just different options in the marketplace than there used to be. There are different strands of income that people are investing in. Sometimes they're just investing in sound exchange income alone or just your Spotify income streams. So if you don't want to put everything, your entire company under collateral, you might just want to put your top titles up. That'll be acceptable too. So there are just different pieces that you might want depending on what your own goals are. And there's just a lot more flexibility in the marketplace for different types of valuations now.
And I would definitely say now is a point in time within the music industry where there's a significant influx of capital. This is, I think I've covered the music space for 10 years.
What was the deal you did last week?
The biggest announcement right now, has been Concord acquiring Amahem, but there's, aside from that transaction, there's just been a significant amount of microtransactions that have occurred, but the big one really is the amount of investors looking to deploy capital in these long-term assets. If you take a look at who's coming in, it's pension funds, it's insurance companies, it is, even companies who used to buy pharmaceutical royalty runs now are actually investing directly into music assets. So anybody who previously, the high yield index today is at 6%, and equity investors are looking for a 15% return. All of these pension fund investors who are looking to get that consistent coupon from publishing assets are coming into this music space. So it's a pretty interesting time, and there are opportunities to splice up different parts of your catalogs. If you have long-term, I always joke around that if I feel like I could go out and make a Casio recording of myself and find some kind of investor to buy it. So there are sources of people buying distinct assets.
So it sort of sounds to me like one possible avenue to do this successfully, if you're an indie label looking to kind of cross this bridge, is to find a professional person to help you do it. Are there people that you can hire to help you, to sort of represent you?
To help you raise money?
To find investors, to figure out how you could finance your company.
Traditionally, this is the job of an investment banker. The reality is, though, that most investment bankers aren't going to get involved unless you get to a certain scale. Yeah. So going back to my life cycle analogy, if you're, pre-product, Series Seed, or even Series A, probably not going to get an investment banker to work with you just because there's not enough money in it for them, right? There's an opportunity cost. It takes them the same amount of time and effort, probably more effort to do small deals than it does big deals. So, for example, I was with an investment banker yesterday who came down to the conference for a few minutes, and he was basically saying, unless the deal size is mid-8 figures, he just can't get involved, right? If it's not a $50 million deal or more. Now, there are people that play at all different levels, and all different points in the life cycle. So there probably are investment bankers that do smaller deals. If you find one, they can help you. But in the beginning, it's usually your own hustle, if that makes sense. And the banks they're public. You can get their information off their website.
I really want us to be able to have a chance to do some Q&A because I think this is an opportunity to talk to these people. So do we have a mic for people to use? Oh, it's right here. Or, okay, Tom, would you like to just speak loudly as you do?
Yeah.
We'll repeat the question.
So in publishing, they have a thing called NPS. So now on the music side, they're coming up with an NPS equivalent. I call it NLS, net
Mhm.
label share, which is EBITDA plus overhead is one way to back into it.
Yep.
Yep.
So what do you think the going multiple for NLS would be today?
I think that's a good question for Nari, is my.
Well, I
If we wanted to buy an asset.
the range is increasing definitely because of growth in the record industry. This inflection point that we've seen. So those lower multiples of 5, 7 are ticking their way up for sure. There's still a disparity between those multiples and publishing multiples, but they are definitely moving up. It's interesting you talk about NLS. I just want to make a comment on NLS versus EBITDA. One thing that will increase the value of a catalog is if it's against NLS. And the way you can justify it is by saying, this is a catalog that's been around for a long time. It's ticking along. It doesn't require a lot of marketing. We can look at it straight on NLS. And if you're going to do discounted NLS, you will definitely come up with a higher valuation than EBITDA. Another thing that's happening is there's a lot more of a hybrid of publishing and masters entities, one of those being the very big and significant deal that Mr. Carvajal was involved in. And so what's interesting about that is if you're an independent and you are ticking along in this consistent way and you can be viewed in an NLS prism, then that can be more easily folded in, I think, into a larger rights management company where there's an existing infrastructure, where there's a lot of publishing already that's moving at a multiple on NPS. So you'll have that hybrid, but you'll be working against essentially what's gross margin on both the record company and the publishing side, and then that's going to speak better for your overall valuation.
Yeah, I just want to reiterate that net publisher share, net label share is analogous to gross margin in a traditional accounting context, right? It's revenue minus cost of goods, which in our case is generally royalties.
Cost of goods, distribution, and royalties.
Mm-hmm.
Usually we have distribution outside of it. So it'd be gross profit, usually would just be revenue less the royalties. Because the idea is that distribution, depending on which label you are or how you move around, that distribution figure can change, right? If you use an outside party who charges a 10% fee or a 12% fee, it changes.
And to your question also, I think that I saw a report recently on catalog multiples, which suggested to me that not only is the trend up, but for you said so 5 to 7 for masters trending up. I think I've seen publishing now over 11 on average from the data I've seen recently.
I talked to a guy who was asking for 18 to 20.
Yeah, well, think
Combination.
if you back that into an internal rate of return, that's like 5% and
Yeah.
change, and that's probably lower than most investors could handle.
Yeah, I mean, I would say that multiples are going up, 1, because the business is growing, but 2 is the amount of capital.
Mm-hmm.
It's the amount of capital, number 1, coming into the space, but number 2 is the amount of capital and where it's coming from. And if you're talking about capital from, I mean, it's all public, right? But people like teachers, Ontario teachers, they have a lower cost of capital than other third parties. And if you look at who's backing some of these bigger music transactions, right, tax exempt pension plans who have lower costs of capital.
Yes.
You said earlier that you guys invest in the long term. How do you know that a company has long-term value? I guess that's my question.
From our perspective, it would be, long-term value would be, and if you own music copyrights or master rights, and if you have a existing catalog, and they're owned in perpetuity and there's not any kind of massive reversions, that's what I would say is long-term.
With the history.
With a history,
With a
yeah.
history, yeah. And also, how is that company being managed? what kind of artists are they representing, how often do they release albums. If it's on a regular basis, and that's certainly going to speak well to not only the new releases, but the back catalog as well. So that's going to just speak to the future longevity of the entity.
From a long term,
Go ahead.
yeah, I have a comment and a question. So first of all, to Jason's point about hiring advisors. I'm a former independent label owner, now I'm a consultant. One thing I always say is the candidates are cheap, lawyers are expensive. Whatever you do, try to employ a lot of the former so you don't have to employ too many of the latter. You're starting out or whatever. My question is, how do you coexist with Kickstarter and Indiegogo? What do you think of them, and do you like to deal with companies that have started with that?
Yeah, I think that just adds to again, I look at everything from a life cycle standpoint. Those are great platforms for artists or companies at different points in their life cycle. And I think it just adds to the diversity of options. I don't think it cannibalizes what we do at all.
So in terms of long-term valuation, on the publishing side particularly, recently the copyright termination clause of the Copyright Act has been kicking in, especially for those that are I'm determined, forgive the exact.
Yep.
So how does that factor into your valuation of, publishing catalogs, especially since a lot of them have, many of them that you're interested in have, writers and composers that have been around for a little while and may want to exercise that termination?
Yeah, I would just say that the way that it factors in is we take a look at, from a valuation perspective, take a look at the catalog, right? And forecast out all of the cash flows associated with each artist or each copyright. I mean, you can't do it on a big catalog, you can't do it for everything, but identifying those specific reversions and when they actually would come out of the cash flows, because every valuation is essentially a discounted cash flow analysis of projected values. And if you're losing that projected value at some certain point in time, it should be captured within that valuation.
And that's exactly what we do, is on that artist by artist basis or song by song basis. We work in when the potential reversion will take place. And for the bigger catalogs, you can take a sample of those songs, and if they're representative of the larger catalog as a whole, you can use that as a benchmark for what would take place.
What documentation are you going to require from somebody you're doing an appraisal for? I assume you're going to want all the contracts, right? So you can track all those reversions, correct?
Yeah, it would be an analysis, and we usually would say, give us the analysis for the top earning artists, and out of those top earning artists, can we see the underlying contracts? And we would identify any specific reversions in those, really to get a sense of the value.
Matt, you were saying before the panel that the deals that you guys do last a certain number of years, like 5 years or 7 years.
Yeah, bank debt is 5 years.
Right.
Institutional debt is 7 plus.
So if that's the case, then would you need all of the contracts to be perpetuity contracts, or what if there were, a bunch of big titles, but they were all under 15-year license, let's say?
Well, the way that it would work is we would always employ somebody like Nari who would give a valuation of the assets, and we would lend, even though we only have a 5-year loan, we would lend against the full value of the catalog, and her valuation would take into play the fact that some of these assets are only 15-year cash flows. So it kind of would be a self-fulfilling analysis.
And Nari, how do you deal with stuff like that when there's licenses rather than perpetuity ownership?
Licenses, so for example,
Like, let's say the album was, the contract said that it was a license for 15 years, so the label had
Okay.
ownership for 15
So
years.
then we project out for the 15 years, and we don't go beyond that point. We
Okay.
project literally for the life of that contract or for that license.
It just slightly reduces your catalog value.
Yeah.
Yeah.
Basically.
Right, I figured. Yeah, interesting. You had a question?
Who would actually pay for the cost of valuing a label? Is it the bank, or would the label pay for it themselves? Can you give us an idea of how much that would cost?
Well, it's typically the rights owner, the label or the publisher that will pay for the valuation. And the banks would receive that product, but it's really a requirement by the banks that the rights holders pay for.
Can you give us an idea of how much?
That it really, I would say it depends on the size of the catalog, very much so, sort of a sliding scale.
Let's give him a goalpost. He looks like he wants to know.
Yeah.
That would be very difficult for me to it also, can I just put a pause point on that one? We're very, we make a point, personally, our firm makes a point of making the valuations more affordable than perhaps some of the other valuation experts in this field. We're a smaller firm and we have less overhead, but we deal with catalogs of all sizes. And we can scale up to very, very large sizes and have done so. But we definitely, I would say, we're more reasonable in terms of, just because of the sheer size of our firm and the lack of overhead that results.
I think I saw another question over here. Does somebody have a question? Oh, sorry.
For Nari, besides evaluation, do you also, or are you able to also make a recommendation about the timing of the sale of the catalog? So like if someone comes calling and you have something like Portia, you know, like Matthew was talking about how like now like selling masters is becoming more valuable for someone who owns a catalog, but would you be able to make any kind of like recommendation if you did the valuation analysis, like this is a good time to sell?
Yeah, I think we can definitely provide some insights based on your catalog, your company, how you've been trending, what the marketplace is looking like, what the multiples are looking like right now. We would definitely be able to, you know, provide some insights into how you could, into the strategies that you might develop for yourself, whether you might be interested in acquiring or selling, whether you want to expand or whether you want to, you know, move into a larger situation. So, and who the potential players would be that would be interested in acquiring as well.
I might add to that I think the key to understanding the value is really understanding the decay curves of the assets, right, in terms of timing.
Absolutely. The life cycle of the assets, the life cycle of a song of one genre or format is very, very different from another. And these are life cycle curves that we have analyzed ad infinitum within all of the different formats. And so we very carefully work those into our growth rates. And so we really go very granular and very deeply into the asset. And so you're not going to see just a top line, let's slap on an X% growth rate. We also look at the correlation between your catalog and the overall industry. So how has the overall industry been trending? What are you doing? Are you higher, lower? Why? Is that explained by something that's sustainable if you're higher? Or if you're lower, can that be explained just because you're a certain kind of a catalog that's very, very steady over time and it's not going to have those jumps and curves that a newer catalog might have, for example?
How are your decay curves affected by like crazy things that happen in the marketplace like sync licensing? Because that'll totally bring something back from the dead. That's happened.
Yeah,
on
sync
many
licensing
occasions.
is really interesting because it's not like sales where there's a certain level of predictability